Hello, everyone. I can see some names joining. What we'll do is we'll give it a few minutes so everyone can get in, and then we'll get started. A few names I recognize. So hi there, good to see you. Great, perfect. Just give it 10 more seconds and then we'll get started. But good morning, good evening, good afternoon, wherever it is that you're listening in from today. It's a pleasure to have you here on this webinar in partnership with Expats Portugal. It's another one of my financial planning and wealth management webinars. So we'll cover some key areas to consider before making the move, and then I'll pass the microphone over to the guest speaker with me today, Chris from LG2. Got lots of questions, lots of people attending. Jerry unfortunately can't make it. He dropped me a message and I spoke with him earlier. Unfortunately, he's traveling, so you'll have to bear with me as I'll be managing questions as they come through, but also speaking as well for the first time. So yeah, great to have everyone here. What I'll do is I'll jump straight in. As always, there'll be a Q&A at the end. I'll also include a QR code as well, so you can scan that using your mobile phone, book in directly to speak with me. As with finances, we have to be more generic on these type of webinars, but to be more specific and tailored to each and everyone listening, book in a meeting, have a chat with me, and we can see whether or not our services will be of any relevance or benefit to your particular situation. So let's jump right in. First of all, there we go. Myself, for anyone who's listened in on my webinars in the past, as you know, my name's Henry Kent. I'm one of the senior financial advisors here at Holborn Assets. I work and have worked with Holborn for the last 4.5 years now, providing cross-border financial advice to expats here in Portugal. And I'm joined by Chris Gabbett from LGT. So yeah, Chris is going to jump in a bit later on and cover where he specializes with portfolios and investment management to US connected clients. But to recap, for anyone who hasn't listened in on any of my webinars in the past, an introduction to Holborn Assets. We are a global financial advisory. As I mentioned, we specialize in providing cross-border financial advice actually to expats all around the world via our 21 international offices, and we have an office here in Portugal. However, me and my team, we specialize in providing cross-border advice to expats planning to move and also situated and residents here in Portugal. As a company, we're completely independent, so we're not owned by any of the major banks or institutions. It essentially allows me to have access to the full investment market, to be able to tailor make, design and recommend solutions that are tailored to everyone's potential situation. We've got an excess of 3.2 billion US dollars assets under management, 5-star Trustpilot on review on Trustpilot, and we're a multi-award winning company. I will include at the end the link, and also we do have access to our corporate brochure as well. So any further information, feel free to reach out to me. I'll get an email out to everyone following the webinar with my details. So any further information on Holborn Assets or myself, just drop me an email and I'll get that sent over. So jumping in, the essential advice. I know this is covered before and after on a few of my past webinars. However, these are the main 4 considerations that come up in pretty much every introduction meeting. So it's imperative and it's necessary to consider these 4 aspects. So I'd like to just reiterate them today. The first one being the importance of financial planning before you make the move. I know that sounds very basic, but understanding income to outgoings, whether that be your retirement accounts, your investments, your savings, your pensions, and then understanding your expected outgoings once you're here. You don't want And I have seen it in the past where budgeting and basic financial planning hasn't been done. And unfortunately, people have had to return back to originating countries for that reason. But yeah, a very good application or website that I recommend using is Numbeo. It gives you an understanding of the general cost of living. This can be used globally, but specifically in this case for Portugal, it gives you the average rent, meals out, utility bills and expenses, so on and so on. So I know that seems very basic, but it needs to be done. Yeah, first one. So the second one, pension and investment planning. Are your pensions and investments prepared for Portugal? As we're all aware from our originating countries, there's usually various tax efficient structures, whether that be pensions, ISAs, TFSAs for Canada, IRAs in the US. They usually lose, well, they do mainly lose their tax benefits once you become a resident in Portugal. So previous tax efficient structures that were beneficial in your country may no longer hold the same tax benefits once in Portugal. Reviewing these early and timing your move can be hugely beneficial and save you from any tax liabilities or tax burdens if you sort of not bury your head in the sand, but delay it until once you're here, you could then potentially be taxable on any sort of surrenderings or income, or depending on what it is on these type of structures. So yeah, best to have a review of your assets and what you have in place, understand how they would be taxable when you make the move. If there are alternative options that may be better suited, then consider them before making the move. And I say this over and over again, be proactive rather than reactive with your finances when moving abroad. The third one, which is another big one, and it's a difficult one because selling your home and moving abroad, okay, some people are packing up and moving and leaving for good and wanting to sell up, but I have and understand in the past there's sentimental value with selling your property, and you may put it off, you may not want to do it, but if it's something that you plan to do in, let's say, 5, 10, 15 years time, whenever that may be, there will be tax liable in Portugal on that property, where if it's sold in a year where you're still a tax resident of the country that you reside in before making the move, usually in most countries there are tax concessions when selling a main residence. For example, from the UK perspective, main residence relief. You can sell your main residence without any capital gains, but if that's done when in Portugal, then that would need to be declared and there could be potentially tax liable. Them 2 points do tie in with timing your move. Timing your move is important because understanding your sort of taxation and when you become a tax resident of a country, usually the general rule of thumb, and there are some sort of caveats to this, but the general rule of thumb is that if you are staying in a country in one calendar year over 183 days, and that doesn't need to be consecutively, but if you stay in a country, let's say Portugal, you move in February, you stay here for 183 days, you are considered a tax resident of this country. If you didn't do the planning before with your pensions, your investments and your property, and you've done that in a year that you're a tax resident of Portugal, then there could potentially and will be tax liable on certain surrendering of assets, selling of assets. So timing the move is just as important as considering what you've got in place and what to do with it. Because let's say, in one instance, actually, with a client that I've spoken to today, taking your tax-free lump sum from the UK, your PCLS is a 25% tax-free lump sum of your pension. If that's taken in a UK tax year where you're a UK tax resident, no tax liable. If that's done where you're a resident of Portugal, for that tax year, then it will be taxable in Portugal. So consolidating assets, selling assets, reviewing alternatives, looking at your options, best done in the year before you're making the move. So you can benefit from these tax incentives and tax concessions. Otherwise, if done once in Portugal, you're going to have to declare that, unfortunately, and you could potentially put yourself in an unnecessary tax burden or situation. These 4 points, imperative. Happy to run through these on a one-to-one meeting. Once again, I'll include my QR code at the end where you can book directly into my diary so we can go through what you have, the timing of your move, if there are alternative structures like, which I've touched on before, the Portuguese compliant bond or wrapper, which is a way of reducing your taxes, which is a very popular investment vehicle for expats here in Portugal. Then let's go through it. Let's run through what you have. Let's go through the tax benefits, or if alternatives are suitable and beneficial, and we can go through that one by one. If there are any questions on that, fire them through. I will run through them towards the end. We'll have a bit of a Q&A towards the end, so we can go through that. But I've gone through this a few in my webinars, so I hope that's all clear, and everyone needs to consider these things before making the move. Jumping on. So the next part is the NHR update. It was it's a topic of conversation, has been since the announcement, the surprise announcement at the back end of last year, that it was coming to an end, and it wasn't given a lot of time. It was the 31st of December that was stopping. After pressure, there was a transition period initiated, which essentially meant that if you met one of the grandfathering rules, you were still eligible to qualify for the NHR in 2024. However, you must have met one of the following criteria here. There will be what they are stating NHR 2.0. Some people have referred it to. This is the new program that focuses on very specific and technical sectors, such as sort of scientists, and it's not as attractive as previous, but there will be an alternative. And for anyone with any questions surrounding this, about anyone that initiated the move or started their application or gained residency in 2023, you will be eligible to apply for NHR in 2024. This isn't something that we directly assist and help with. However, we do have professional partners where if you have any questions on this, I'd be happy to put them forward, and we can establish whether or not you qualify under the grandfathering rules. But yeah, that was a big surprise for everyone, and I know it caused that initial panic as well. I know I was speaking with many clients who were worried, who were planning to make the move. But if you tick one of these sort of criterias, then you're still eligible to apply for the NHR. So a bit of a short one from me today, because what I wanted to do was bring the guest speaker, Chris Gabbett, in from LGT, as it's your first time, well, it's Chris's first time speaking on these webinars with me. I'll allow Chris to obviously introduce himself. However, Chris specializes in investment management for US connected clients in Portugal. He's gone very well, them as a team, and also Chris himself has an impressive track record of delivering returns for my clients, and also their client service stands out above the rest with a lot of investment managers that we've worked with. So I'll pass the microphone over to you, Chris, and allow you to jump in there.
Lovely. Thank you very much, Henry. Good afternoon, good morning, good evening to everyone watching on. As Henry said, my name's Chris. I work at a firm called LGT. I've been with LGT since 2011, and I've been working specifically with US taxpayers, US connected individuals since 2015. Across the sort of the US side of the business, there's 27 of us looking after US taxpayers. That ranges from our sort of investment management team to our portfolio management team, and everyone has a wealth of experience when it comes to US tax and some of the consequences of being a US taxpayer outside of the US. So look, today I'll sort of run through a few slides, but as Henry mentioned as well, look, feel free to post any questions you have, and I'm sure we'll have time at the end to run through them. So a little bit about sort of LGT. It's a firm you may not have heard of historically. I refer to them as sort of one of the largest firms you've never heard of. That certainly was the case when they sort of got involved in our firm back in 2016. They're actually the largest family-owned private bank in the world, or owned by a single family, I should say. They're based out of Liechtenstein, but they've got bases all across Europe, Asia, all across the world, really. We've been established in terms of the UK side of things since 2008. We formed LGT Wealth Management US back in 2012. We are regulated by both the SEC in the States and the FCA. Now, what that really means is we're one of a very few number of firms outside of the United States that can provide investment management advice to US taxpayers. If there are any sort of US individuals on this call, you'll know that even sort of simple banking for US people outside of the US can be tricky sometimes to manage. In terms of the firm and assets under management, well, LGT Wealth Management manage just over 30 billion of assets under management. In terms of what that means for US taxpayers, well, it's just over $1.4 billion. And I'll come on to sort of what the typical sort of account and client looks like for us. And I'll go through, if we've got time, a very short sort of case study that myself and Henry have previously worked on as well. So just on the next slide there, we as Henry mentioned, look, we try and put sort of client service first. We've always sort of had that philosophy. It's very well having great performance over time, but we sort of very much put client service right at the forefront of what we do. And it's a two-way street, really. There's trust. You've got to trust us in terms of the investment management side of things, and trust that we're going to achieve your long-term objectives. But we've also got to trust you to make sure that we're running a portfolio in line with what you want and your long-term objectives too. In terms of sort of the team, well, sort of primary contacts would be sort of probably Henry in the first instance, and then sort of I can join any sort of calls with Henry if required. We have a wealth of experience, as I said, within the team. Part of the team are actually Americans living in Europe, so they go through the sort of potential issues every day as well. And we're, as I say, we're here just to sort of make sure everything is straight from an IRS perspective and a local taxation perspective as well. So I'll just ask Henry to move on to the next slide there. So a lot of what we deal with is tax. Now, I'll caveat what I'm about to say. We aren't tax advisors. We're very much tax aware. I go to many tax conferences. It's not the most fun, but we have to make sure that our knowledge is kept up to date all the time. And really, what we're here to do is ensure that clients aren't tripping over some common issues that we've seen, several times in the past. As a US taxpayer, you're taxed on a worldwide basis. So I use the example of, you could be resident in Mozambique, and the IRS will try and sort of look at what you should pay them on an annual basis in terms of tax. Now, what that creates is certain tax wrappers, certain accounts, certain investments work very, very well in the US, and you still, you know, have tax relief in the US, but they may not work so well in Portugal, as Henry was mentioning earlier, with US retirement accounts and Canadian retirement accounts and the like. Now, what we're here to do is ensure that we aren't sort of falling foul of any of those IRS rules. So a typical one that we see quite commonly is any sort of European listed fund. So whether that could be a sort of Luxembourg listed fund or a Dublin listed fund, a pooled investment, if you like. Now, they're great from a local perspective, but not so great from a US perspective. And actually, any gains, any crystallized gains, so if you sell an asset for a profit, typically they'd be taxed to capital gains rates in your local region. Well, actually, in the states will say actually that's classed as passive income, and you're going to be taxed as at income rates. So it's very much investment structures like that we look to avoid, and effectively ensure that you are going to be taxed to the correct rates going forward. So again, just to summarize, what I mean by that is the capital gains that you accrue and potentially the profit that we make on any investments, they should be taxed to capital gains rates where you reside. So if that's Portugal, then that's Portuguese tax rates. And the same with any dividends or coupon payments from bonds, they should be taxed, in Portugal, rather than the States. You don't want a situation where you are double taxed because your investments aren't suitable for sort of the US or your local residency. On the next slide, I'll talk about sort of just the challenges in terms of, filing a tax return. As I'm sure you know, as a US taxpayer, you file an annual tax return. Now that has to be, or it should be, sort of all in US dollars, and you should receive a tax report from your investment manager that sort of very much mentions the fact that it's in dollars. Any sort of highest balance for an FBAR report that you require as a non-resident or holding assets outside of the States, I should say. So we ensure that all of our clients receive the appropriate US tax reporting for the US and the IRS as well. I'm glad to say that we are also working on a Euro-based tax report as well, for local filing as well. Henry, if you could just pass forward a slide, you may have to go through.
Continued. Yeah,
lovely. If you just sort of pass through that one as well, I've sort of touched upon that.
Perfect.
So ultimately, look, as I said, a lot of what we do is sort of tax based. We work, myself and Henry work with whether it's sort of local tax advisors that have knowledge of US. We're more than happy to sort of put you in touch with anyone on that side to assist with any filing leads. But ultimately, what we want you to have is sort of trust in us that we know what we're doing, ensuring that everything is suitable. So we manage assets on several different bases, but ultimately what happens is, in order to fulfill IRS requirements, we invest assets in cash in a range of sort of different scenarios, utilizing directly listed assets. So what I mean by that could be directly listed equities, such as Apple, Amazon, for example, or it could be directly listed sort of government bonds or corporate bonds. We manage assets in dollars, euros, and sterling. I would typically say it depends on where your assets are held as to where would be appropriate. For example, if you held a US retirement account in the States, then that has to remain in the States for sort of tax reasons. So we'd manage that in dollars. If you wanted a sort of more of a local portfolio based in Europe, then, well, let's utilize it sort of euro-based portfolio. If you're living and breathing in euros, if your liabilities are in euros, well, let's use euros as your sort of base currency. We can tailor a portfolio again to sort of meet any client requirements. So whether that's to avoid certain sectors, to provide a certain amount of income, anything like that, we can sort of provide for you as clients. We often see clients where they may have a large shareholding in a previous workplace. I was working with a client just today where she previously worked and held Apple shares. So we love Apple; it's a great company, but we want to avoid that within her sort of main discretionary portfolio. Otherwise, she'll be vastly overweight on that position. We also have our sort of sustainable portfolios or ethical portfolios. It's something that's become very, very popular over the last sort of decade or so. Typically, it's to avoid sort of any nasty sectors, but we go one step further than that and actually look for the positive change in companies. I think you'll see in sort of 10, 20 years time, every firm, every company that wants investment will have very, very strong ESG practices. Even energy companies that typically and historically clearly mine for oil, etc., but they will also have quite strong ESG credentials too. And it's all about sort of clearly making sure that we are meeting your needs, really. Between myself and Henry, we'll sort of ensure when we go through any sort of account opening, we'll go through what you are looking for, whether it's out and out growth or an income from your portfolio, and it's up to LGT to structure that portfolio for you. Henry, if you just pass forward to the next slide. Thank you.
I would like to add as well, that's what makes you stand out. Working with my clients and designing portfolios, taking into consideration their preferences, their goals, getting to know what they're looking to achieve, and all of us working together, it does make you stand out from the others on that front that I've worked with in my 10 years in this industry.
Thanks, Henry. I should also say at this point that the type of accounts that we sort of typically see from US individuals, well, a sort of case study that myself and Henry have worked on previously. We've had a client that's sort of retiring in Europe. They've worked pretty much all their life in the States, but wanted to change. They had a US retirement account over in the US. It was a workplace pension, so it was a 401k at the time. Now they are very, very common in the US. Most employees will receive a 401k, but what happens when you leave the US? Well, a lot of providers will just suddenly say, well, actually, now that you're not a US resident, we can't help you. It's something that we see not quite on a daily basis, but very much on a weekly basis. And they'll literally, the provider, whether it's a Wells Fargo, whether it's a Merrill Lynch, they'll just send you a letter and just say, look, now that we've seen that you're moving outside the US, you need to find another solution. So that sort of came across myself and Henry's desk, and we really wanted to help this individual out. They also had a brokerage account in the States. So what we did, we moved their 401k, their workplace pension, into a more flexible structure called an individual retirement account, or IRA. Now, what that did, that enabled us to sort of provide advice, structure the portfolio to meet their requirements. It allowed Henry to do all of the cash forecasting, cash planning for their retirement, and sort of seek to draw an income from that retirement account whilst they were in Europe. It just made that Henry was much more in control of our clients' retirement. And then with their brokerage accounts, what we did, we moved it to Europe. We moved it from the US to Europe. Now, that's not a taxable event. We moved all of the assets from their name in the US over to Europe. But what it did mean was we could provide or hold more euro investments. I mentioned earlier, if a client's liabilities are in euros, then, well, let's structure the portfolio to include more euros, because what you don't want to see is huge fluctuations in whether it's whether it's currency fluctions or investment fluctuations. But if you've got a lot of dollars, well, the dollar's strong at the moment, but it might not be in the future. So what we did, we just introduced some more euros into their investment portfolio for them, and I'm pleased to say that's going well. But as part of our sort of typical portfolios, we typically manage assets on a risk-rated basis. Now, what I mean by that is Henry will go through a sort of risk profiling exercise with you. He may have already done that with several of you. Now, after that, it will really sort of, show us and sort of provide a clear idea of what you want to achieve from the portfolio and how much risk you both want to take and can afford to take. So that's typically following this, we will structure a portfolio to maintain that sort of risk profile. And as you can see there, it's typically sort of 20% increments on equity exposure that we have. And as I said, look, if you fall between those buckets, then we can tailor the portfolio to meet those needs. We also, as sort of Henry suggested earlier, look, with our service, we provide full US tax reporting. I mentioned we also do have a portal and an app to go with that. So Henry will have access to sort of view your portfolio. And following that, you'll also have access to view your portfolio, download any reports, download tax reports, valuations, etc. We also, I was sort of joking earlier with Henry, in the room next to me, my portfolio management team is actually hosting a client webinar. I think it's finished now, but it was sort of finishing off when I started this one. But we host quarterly webinars where clients can log on, they can ask questions to our portfolio management team. Feel free to grill them any questions. That's great. I do enjoy that. So that's something that we also offer for all of our clients as well. But as Henry sort of mentioned earlier on, look, we are very much client-led and service-led, and we are here to help and assist, because the moving to a new country can be daunting enough without sort of having to worry about what's happening with your financials.
No, definitely. Just touching back as well, that you mentioned there, Chris, on the US advisors who cut ties once their clients have made them aware that they're moving abroad. I've seen it once or twice in the past where they have actually said, if you are keeping let's say your US residency, we'll just sort of turn a blind eye to it and we'll keep it based on that residency. But there's two aspects to consider there, or issues, let's say, that you're delaying. One, making sure that all of the underlying assets are appropriate for Portugal. But secondly, if let's say 5, 6, 7 years down the line, you decide, okay, now I want to sell my property, you've then got two headaches at once. You're trying to sell a property and you're having to manage your finances all in one go, which it's better to address. So ask your advisors, make sure that they have the right understanding of Portuguese tax rules if they're still willing to assist you, and also understand whether or not it is going to be an issue further down the line if they are basing it on your property, let's say. But yeah, thank you. Is there anything else that you'd like to add there, Chris? Or
no, not really. That was a really good point. Final point on sort of the likes of US brokerage houses will allow you to keep their portfolio with them if you've got a US address. But it's just something to be aware of in the future with potential issues going forward.
Yeah, no, indeed. Thank you very much. So yeah, we've got a few questions that we'll jump into, but for anyone that's wanting to speak with myself, put forward any sort of specific questions to their unique situation, I recommend scanning, using the QR code to book a meeting directly into my calendar. There's my email address there, contact number, and we also offer our corporate brochure. We do have a free guide to tax for Portugal as well, so understanding local tax rules, and then again a complimentary Zoom or Teams call. Yeah, reach out to me as you like. Any questions, any queries. I will be following up an email with this webinar that will have the recording along with my details and the brochure there. I think that ticks your or answers your question there, Charles. Yeah, sorry if I sped through that quite fast at the beginning. You don't need to write furiously. It's fine. We'll send you a recording. You can drop me an email. You can reach out to me and we can have a chat. Marika, please confirm the tax residency, the 183 days rule. So obviously that's a general rule of thumb, and there are nuances to this, but that is usually based on a calendar year. Yes. Ken. Hi, Ken. How's it going? Good to hear from you. We're currently working with Chris and Henry to set up our investments. We found them responsive and knowledgeable. We've just gotten our NHR. Fantastic news. I'm wondering if you can help roll over traditional IRAs to Roth IRAs. I believe so. That's
Yes, yeah, we can do, Ken. I would like to say that it wasn't a planted question or point there. we haven't paid Ken for that. Yeah, we do it quite a lot actually, and it's we'd always suggest to take tax advice on that, because clearly when you move from an IRA wrapper to a Roth IRA, it is a taxable event. It's worked out very, very nicely over the last few years, particularly as markets fell. It was a good time to crystallize that tax and then move it into a Roth IRA where it's tax-free going forward, and then you don't have to pay tax on the way out. So yes, we absolutely can do that for any clients. We work with sort of a US provider where we hold all of our US domestic accounts, whether that's brokerage accounts or IRAs, either traditional or Roth IRAs.
Perfect. Thank you. Please explain, Jim. Hi, Jim. Please explain how you can transfer US exchange to euros through your firm. Jim, I imagine that depends on what structure and how that's currently held. If it's cash to cash, then I would recommend using Spartan FX, who's also part of the Expats Portugal Dream Team. They'll be there to assist and help with any currency conversions. They're very good as well. So I imagine you'll have their details. If you'd like their details, I can send them over to you, Sarah there at Spartan. But yeah, I imagine that's what you mean. But if you could elaborate, or if I've covered that, then that would be great. And then there's just a few more questions that came in before the webinar for people attending. There was one or two that wanted to be covered. Barry, will be needing to move my investment accounts from US-based broker. Yeah, once again, I think Chris has covered that. That's something that we'll be able to assist and help with. If you want to talk through that, book into my diary. Investment opportunities for non-US residents. So I think I've touched on this on one or two webinars previously. I didn't go into too much detail today because, as I mentioned, I wanted Chris to introduce himself. He's going to be present on a few more of these webinars now. But no, there are various options. Okay, you're slightly restricted compared to what you're probably used to being back in the US or in the UK or in Canada or elsewhere, depending on where you're listening from. So there are restrictions on the type of options available there to you. However, there are still, let's say, the equivalent or the closest to these type of structures available here in or based outside of Portugal, but tax efficient and suited and compliant for Portuguese residents. They're very popular investment structures. They're called the Portuguese Compliant Bond. I've wrote one or two articles for Expats Portugal on these type of structures, where the longer you hold this type of investment, you can get a 60% reduction in capital gains over an 8-year period. So it's perfect for people planning for the end of the NHR when they come out of that NHR period. If you've structured your sort of assets or investments into this type of wrapper, then by the time you come to the end of the NHR period, you'll be having a 60% reduction on them capital gains over that period of time. Unfortunately, it's not available for US connected clients due to FATCA legislation. So yeah, unfortunately, it's not available to any US connected clients and people here on this webinar. However, for other nationalities, it's a very popular choice. It's one of the most tax efficient, and it needs to be considered for anyone holding sort of ISAs or direct or investments outside of Portugal when moving. So any further information on that, reach out to me. I can send you a link to my articles. If you'd like to book in and speak with me about these type of structures or about sort of Chris's services, then book in to speak with me. But I think we've covered everything for the webinar this evening. It's been a pleasure. You'll see me soon. This is the first one of the year, but we will start doing these more regularly now. And I look forward to speaking with you soon. All the best. Thank you very much, and have a lovely evening or day. Bye-bye.